Hey everyone, so we're working through the MSOs in the cannabis industry at the moment, and today we're looking at Green Thumb Industries. Now, firstly, if you are looking into this deeper, don't use their adjusted EBITDA numbers. They adjust out stock-based compensation, depreciation, and lots of other things that I don't think they should. Please use their GAAP, like standard accounting numbers for this company in particular. Charlie Munger would say that when you hear the word adjusted EBITDA, it translates to bullshit earnings, and I think he's right in this case. So be careful with this one. Now, even though I'm not going to paint the best picture of this company today, if you are interested, you're going to need a broker that can access the OTC markets, and Interactive Brokers is the one that I use to access companies in the cannabis space. There's a link in the description below. All right, so Green Thumb Industries, they're, like I've said already, an MSO, which stands for multi-state operator in the cannabis space. They're essentially got retail, like consumer retail locations. They call themselves vertically integrated, which means in a lot of the states, you have to grow it yourself in warehouses, and then you have to have the entire supply chain under control all the way to delivering it to the consumer in the retail store. So you've got the entire supply chain under your control, and that's important for legal reasons in the cannabis space. That's what most of the MSOs do. I think actually that's what all the MSOs do. So there are some tailwinds coming to this industry, and that's probably why I'm looking into this space, is because if any of these tailwinds, if any of these sort of catalysts come to fruition, most of these companies are going to see big increases to their bottom line. For example, if they've got any of these, like what they call safe banking laws get passed, which means that cannabis companies can finally use the banking system. At the moment, they're just holding like all this cash, and it's dangerous because all these retail locations just sit on piles of cash all the time. You've got to have security there for robberies and things like that. So you can't even use a credit card to pay for your cannabis. So look, there's some things that need to change from a banking system point of view. Then you've got legalization federally, legalization across different states that are all quite positive catalysts for the cannabis industry that are coming at some point. We don't know when. The big one is going to be the tax breaks under the 280E system. Removing this will mean that the states won't be able to tax on gross profit, which is where they're taxing at the moment. They'll tax on net profit, which means you get all these expenses as your deductions. And at the moment, they're not having that, which is brutal in any business. It's essentially making them almost unprofitable to run a cannabis business with the onerous tax rules. So removing this 280E is going to be a big boon for the cannabis space. But before you go out and buy any of these companies, I just think, well, Green Thumb in particular and a lot of the MSOs, they are just trying to grow brands at the moment. And to have a great brand, you need consistency. Just like McDonald's is a great brand, they were able to consistently produce their product. Imagine something like painkillers like Panadol or something like that. Imagine if you took a Panadol and it didn't work, and then sometimes it would work, it was really strong, and then you had no consistency over what you were getting. In the cannabis space, it's the same kind of thing. You've got to make sure from a retail point of view that you're being able to produce something consistently. Otherwise, you're not going to get any brand recognition over any long period of time, because people are just going to not trust that particular product. And that's a big issue with all of these MSOs, is I don't know how good they are at producing reliable cannabis at the moment. Consumers are really fickle. Consumer preferences are always changing as well, with different types and varieties of cannabis and tastes and smells and all sorts of things going on here. So it's a pretty difficult industry to operate in. And I just don't like consumer brands generally, as I think a lot can go wrong, especially when the rules and the competition, it's really fierce out there. And there's no real track record in the industry. There's no household brands yet. They're attempting to build a household brand. That's what they're all trying to do, but I have no idea how to attempt to take that gamble and predict what's going to actually play out here. There's no clear winners at the moment, or not even a sign of a winner at the moment. So this is a pretty tough space to play in as an investor, not just the people in the industry as well. From a management point of view, I think Ben Kovler, the CEO of Green Thumb Industries, put out a really good point in his Q1 2023 webcast. I'm going to read it for you here. He said, "So don't look for massive or transformational M&A from us as you go forward. Integrating deals is hard, closing deals is hard, and it is even harder to measure those returns. We love our portfolio today and love the states we are in. We have growth embedded in the portfolio now, and we are putting in massive amounts of capital directly into our business that is far cheaper than these bargain basement M&A prices that are out there, because there is hair on those stories. So I like to cleanly build a brand new facility and understand the investment and understand what those returns on the investment are going to be. Essentially, it is us buying our own business at much, much cheaper than any M&A. because we go from the ground up and we think we know what we are doing after this many years. I really like that from management because M&A is really difficult. So even though the stock prices have been getting punished lately, I'm glad that Green Thumb Industries are focusing more on internal return on invested capital numbers, not on M&A. I think that's really prudent of them. I think that's going to play out nicely for them in the longer term. I think that's the right way to think about it. But on the flip side to this good commentary from the CEO, last year, actually half of their board resigned. The general counsel resigned as well. And then 2 directors resigned, all in a really short space of time. I don't know what that says exactly about the business, but it's not a great sign when a lot of key people are all leaving at a similar moment. And then if we go and have a look at their balance sheet, they still have a lot of intangibles. Even though they don't want to do M&A activity, there's already a lot on there, and it could easily be worth a fraction of what they're quoting it as. So that's something to be really careful of, is the high level of intangibles. The debt levels are actually pretty good though, with debt to EBITDA a little over 1, and the debt that they were able to access was at around about 7% interest rates, and that's due in 2025. That's pretty reasonable cost of capital in the cannabis space. Another thing I liked is that they've had no need to close any stores so far, as they were quite thoughtful and disciplined about the retail footprint that they currently have. And if we look at the makeup of their stores, they have 80 stores across 14 states, Nevada being one of their bigger ones, Illinois. Minnesota is actually really interesting because with Green Thumb and Goodness Growth, they're the only 2 who are able to get licenses in Minnesota, and they're only going to issue apparently 2 licenses. Obviously rules might change, but Green Thumb and Goodness Growth have essentially a duopoly in the Minnesota market, which is pretty cool. They have a few stores in Florida, but Pennsylvania, they have quite 17 stores, which is quite a lot. And scattered amongst the others, they've got a few stores. And another cool thing about them having one of the 2 licenses in Minnesota is that that's actually going to be a fully legal market in 18 months' time. That's already been announced. So they've got quite a significant market share of a new state that's going to come online. That'll produce cash for them, which is cool. Now, if you watch my previous video on Curaleaf, I'm getting a better gut feel on this business. I think it's better run. I think they have a tighter understanding of operations. I don't know about their quality control yet, so that's something that I would really want to monitor. And if I haven't mentioned yet, these guys are actually profitable, and they've been profitable for the last few years, unlike most of the others that we're going to cover. So looking more into their numbers, they have a 49% gross margin percentage. They have 20% operating margins, which is the highest out of all the MSOs. Their market cap at the moment is about 1.8 billion, where we got price to sales at 1.7, EV to EBIT at 11, EV to EBITDA at about 7. I don't see anything that makes them unique, except maybe having that duopoly in Minnesota. Their debt to equity is low at 0.34, debt to EBITDA is at 1x. They do have medium amounts of stock-based compensation. The salary of the C-suite is high, which is unfortunate, and insider ownership is low, which is also unfortunate. So there's not as much skin in the game from the CEO and the people running this business. So don't love that in any of the investments that I look at. I want to have alignment of interests between the people running the business and me as a potential investor. So that's how they score at the moment. And my overall opinion on this is that, well, I think with all those catalysts and changes that are going to take place in the cannabis industry, a rising tide is going to rise all the ships. And I think Green Thumb is actually well run, and they seem disciplined. They've got thoughtful capital allocation skills. They're planning long term. They've been aggressively burning cash to expand. They're spending essentially all their operating cash flow on expansion. But considering their debt levels, they've seemed to be less inclined to tap capital markets and debt markets, which is good. I also like that they're not chasing M&A deals to expand at the moment. They're going to try to focus on what they've already got, the internal return on investment that they can generate. I think that's great. The reason I think that's great is it's always better to use capital internally because you have more control and you can see what the ROI is going to be, rather than chasing M&A where you're buying growth and you're not quite sure how those operations are. And I've bought companies before, and when you buy a company and you actually finally get it to come to you and you take over, there are things that you missed and there's issues that you face, and it takes 18 months, 24 months even to get them moving like you thought you should be getting them moving. M&A is hard, and Trulieve, for example, are finding it really difficult with the Harvest Health acquisition. We'll talk about Trulieve in the next video, but M&A, not a big fan of in the cannabis space. Now, after all of this, the big issue for me is that I just don't think they have a clear competitive advantage. Operational excellence in consumer products, I don't think is much of a competitive advantage. I can't get behind that. I think competition is going to be fierce. And when regulations and rules open up throughout America, competition is just going to become more fierce. So I don't think they have any competitive advantage. Now, ranking Green Thumb on my tier list, at the moment, I've only got Curaleaf on there, and I'm going to put them actually above Curaleaf. I think for all the reasons I've mentioned, I think they're better. Do I think they're that good? Not really. No competitive advantage. Yeah, I don't really like the business that much at all, honestly, but it's better than Curaleaf. Then that's how I'm going to rank it. I'm going to put it on the C tier, and in the next few videos, we'll get to Trulieve, Verano, and Cresco Labs, and we'll see how they all compare here on my little tier list that I'm putting together. Hope you've enjoyed this video. See you in the next one.